Snapchat released a dire warning to investors and, quite frankly, the global economy yesterday. The shares are down over 40% during the regular trade today. What does this mean for Facebook? What does this mean for Google? What does this mean for Pinterest? Can you buy these stocks? Can you hold these stocks? Should you sell these stocks? Is all the bad news already priced in? We're going to talk about that and more on today's show. What is going on, investors? Hopefully you guys are doing well out there. Time to recap all the happenings in the digital online advertising world as Snapchat really, quite frankly, shocked the market with a SEC filing that came across late yesterday. Now, these things are dire when the very first sentence of this filing, obviously you have a lot of illegal mumbo jumbo up above here, but the very first sentence says, since we issued our guidance on April 21st, 2022, the macro environment has deteriorated further and faster than anticipated. You pretty much could stop reading at that point, but they go on to say, and this is Snapchat, as a result, we believe it is likely that we will report revenue and adjusted EBITDA below our low end of our Q2 guidance range. And obviously, we saw stocks like Facebook absolutely take a face plant heading in today. We also saw Google take a massive hit as well. And then we're looking at stocks like Pinterest as well, getting absolutely decimated on this news since it kind of flows through the industry. The first thing that I want to talk about is Snapchat and the nature of their advertising and how this could be a reflection on the broader overall economy. Now, it's hard to get exact data, but on Snapchat, what we know is there's a lot of brand advertising because when you look at the demographics of the Snapchat user, it tends to be a younger user without an access to credit card. So a lot of the advertising on there is not really transactional based, like they want you to click and buy something or click and sign up for something. It's just ExxonMobil and Walt Disney and Lyft and Pepsi really just doing broad brand advertising. So it makes sense if the economy is deteriorating as fast as Snapchat says it is, and quite frankly, it is accelerated just over the last couple of weeks. This is unprecedented. It's an evidence that these larger brands are going to start reining in the fringe advertising, the brand advertising, the advertising that just doesn't bring in a dollar of revenue. It's just simply out there. And obviously that's going to impact a company like Snapchat, since a large portion of their advertising is brand based. And so that's certainly going to hurt this stock. Now, given that Snapchat is down over 40% today, we'll talk about it in relation to the other online advertising giants out there, including Twitter, Google, Facebook, The Trade Desk, and Pinterest. We'll look at it from a valuation perspective. Has it pulled back into a range that makes it a buying opportunity? But we've talked about this broadly here on the channel. I've done many videos on all of these companies. Just in the last month, we've seen Q1 revenues come in across the board on these companies. We saw the weakest growth over at Facebook, grew just 7%. Twitter grew 15.4%. Pinterest grew 18.5%. Google, now in hindsight, grew an impressive 23%. Snapchat grew 37.8%, and they were expecting 20 to 25% growth for that upcoming Q2. That is likely going to slim down into Pinterest, maybe even potentially all the way down into Facebook territory on that growth rate, maybe high single digits, maybe mid-teens, similar to what we're seeing at Google. That's certainly going to compress your multiple over at Snapchat, and that is what we are seeing today. The stock is down over 41%, in large part because of this massive surprise that they dropped on shareholders. But another thing was that Snapchat was simply just wildly overvalued compared to the other online advertising giants, or quite frankly as well, Snapchat was really tied to this growth rate. They had a multiple on their price to sales. So what I have is a 3-year price to sales of Snapchat here in orange. We're seeing that absolutely compressed. That's probably not even accurate. I have an 8x sales figure on this stock, but it's going down another 40%. We're probably much closer to about 5x sales on Snapchat. And that is a key number because when you look at Twitter, an online advertising stock that used to get a little bit larger premium to their sales, now guess what? Trades right around 5x sales. You look at Google, the absolute behemoth in the industry, trading right at about 5.5x sales. You're seeing Facebook, their multiple compressed since I just showed you their growth rate both on the current quarter and the upcoming quarter actually is the least out of all of these stocks, excluding Twitter, which didn't provide any guidance for the upcoming quarter. Well, look at Facebook's multiple on a price to sales. Now is the bargain of the bunch, down close to 4.5 times sales. Again, this does not include today's drawdown on this. You have the Trade Desk, which is off huge today. That was trading at 19 times sales. That multiple is going to have to come in big. If you're holding this stock, I would expect it to continue to go down. And Pinterest, again, trading right in that comfortable range. Now it looks like the market has priced online advertising stocks. When you get this type of confirmation, you know that the market is working in tandem. Pinterest trading at 5.5 times sales. Google trading at 5.5 times sales. Twitter trading at 5.5 times sales. Facebook actually trading under that, again, because they have the lightest growth. And then you have the Trade Desk, which is off massively today, probably trading closer to like an 11 or 12 times sales. And Snapchat all of a sudden now back to the market multiple of 4 or 5 times sales. You'll ask yourself, what is going to make the multiple expand? Well, you look at Google, and Google's traded at like 8 or 9 times sales more recently when the stock was kind of at all-time highs last year. Well, there's your multiple expansion. These companies start to re-accelerate the growth, not only quarter over quarter, year over year, but also that guidance stretches back out into that 20, 30%. Whether or not that happens this year, whether or not it happens next year, whether or not it ever happens again is really the argument you have to make for buying these stocks today. You need this multiple to go back from 5.5 back up to 7, 8 times on a Google, back up to 9 times on Facebook. I think the days where Snapchat is trading at 30, 40 times sales, those days are over. Same with the Trade Desk, same with Pinterest. The days of the online advertising stock trading at 30, 40 times sales are over. It's never going to come back, but I think we could comfortably say if this industry gets its kick step back, it could get back into that 7, 8 times sales multiple. Certainly some growth there, but we have to remember that the macro environment, just like Snapchat said, is changing rapidly. I mean, we're talking about over the last couple of weeks. Again, they reported their earnings on April 22nd. I'm recording this video on May 24th. Times are changing very quickly. We have retail inventory across the board move to record levels. This is showing you that demand has fallen off a map. Inflation is hurting people's ability to buy things at Ross, at Amazon, Abercrombie & Fitch, Target, Kohl's, TJ Maxx, Walmart, and Ralph Lauren. This also means these brands and these companies have money sunk into inventory. That's going to leave less money for things like online advertising, certainly going to impact these companies. Now, in terms of whether or not you should buy these stocks or whether the bad news is already priced in, clearly the bad news is not priced in yet. As a stock like Snapchat pulls down 41% when this company is looking to meet the low end of their revenue guidance for the upcoming quarter. Here's Snapchat's revenue estimates. It was expected to be about $1.19 billion. We'd expect this to come south of maybe $1 billion or right in that range, moving our year-over-year growth rate south of 20% on this one. This also means that the rest of these growth rate, again, this is quarter over quarter over at Snapchat. Guys, in the fourth quarter, we're expected at Snapchat to grow 32% and expected to say mid-30s to high 40s for the subsequent quarters. These estimates have not come in yet, and are investors really pricing that in? I would say to a certain degree today, when you see a stock decline this rapidly, 41%, investors are not only digesting the most recent Q and the upcoming Q, well, they're starting to project out 2 or 3 quarters in the future. So now it just remains a story how long this weakness last, if it lasts into 2023 and 2024. Well, I tell you what, the multiple still on Snapchat and the likelihood of this stock being a buy just continue to go down and down and down. Now, when we look at Snapchat, and we've looked at it many times here on the channel, we do not like this company because it's just not profitable. I'd rather take my dollar, which doesn't know the difference between Snapchat or Facebook other than that it wants to make more money. Well, I'd much rather put my money into a profitable company, one that's doing buybacks, and Snapchat is not doing that. In fact, they're not even making money off this $1 billion worth of revenue. Again, this was a month ago. The company had $1.3 billion worth of cost. You lost $271 million. That was basically flat flat year over year. They were not improving there. There were some internal memos going around over at Snapchat talking about how they might do a hiring freeze. That certainly will help these costs to a certain degree, but nothing I would get super excited about with Snapchat. Now, from a technical perspective, where do I expect Snapchat to pull back into? Well, I tell you what, we had some lows back here in December 2018. From a technical perspective, over at Snapchat, we made some lows back in December of 2018, made another low like a lot of stocks back in March of 2020. And ironically enough, we're sitting right on top of this trend line. That makes a small amount of sense, but the momentum in this stock just continues to look really bearish like the rest of this market. Wouldn't shock me, quite frankly, if we retest the lows on Snapchat, which would quite frankly take you into penny stock territory with this one. The thing that we have to question about Snapchat is the most recent quarter had to be reined in just after a couple of weeks of providing guidance. That was not priced into the stock. I'm questioning if we don't see weakness heading into next year and maybe all the way into 2024. If that's the case, this stock is still probably wildly overvalued. I would steer as far away as I possibly can of Snapchat. While I would expect a stock like this to have a nice rally at some point, for the average retail investor, I would consider that too far of a risky bet, in my opinion. Now, moving on to Meta Platforms, otherwise known as Facebook, this stock is down big this year, down over 46%, and we're seeing on today's trade down over 8%. When we look out with Facebook, I just posted a video not too long ago on Facebook's earnings, and the title of the video was Facebook stock has a $29 billion problem. This was just 3 weeks ago. I'll put a link into the description down below because I'm not going to get into too much depth with Facebook because I've already made this argument. This wasn't the first time I've made this argument about Facebook in the fact that they have not put up a quarter over $29 billion since the iOS changes over at Apple. I've done some other videos about that as well when it comes to Snapchat and other online advertising companies. I am not convinced that Q3 over at Facebook is going to be any better than Q2, where Facebook has Q3 revenue coming in at $31 billion. That's 7% growth. That's mediocre growth. Again, I'm looking 2 quarters out, and I don't think they're going to get to 31 billion. I think they're going to come underneath that. And then when we look all the way out to Q4 of this year, they're projecting $37 billion worth of revenue over at Facebook, just 11% growth. I don't think they're going to hit that target either. I think you're looking at very low single-digit growth for Facebook over the next couple of quarters. Is that priced into Facebook shares? Some people could argue that it potentially is, but from a technical perspective, we talk about this every week on our Friday show. This one's locked in this downward channel that I have marked out here with these green lines. We came up here a week or so ago, tagged the upper trend line, and now we're making our way back down. It looks like to me, we're going to retest this bottom level, making new lows, which currently sit at about $168 per share. I think we're making new lows, probably maybe even by the end of the week, south of $170 per share on Facebook. This would not be a stock I would recommend holding in the shorter term. I don't think you have any opportunities to make a lot of money other than maybe buying it down here at the bottom and then playing a rebound trade to the top. But I think there's a lot of other sectors that I would rather play that in. In fact, there's sectors that you look at like a Pepsi chart or a Coke chart. This is actually doing the reverse. It's channeling upward. Probably rather play that game with a stock that is trending upwards. If you followed my channel any length of time, I was very bullish on Facebook for a very long time. Took my profits on this stock back in this range and just continued to walk it down. This likely is a buy in the near future, but I would let a lot of this smoke clear before I stepped in on Facebook. Now, moving on to Google, year to date, stocks holding up decently, up 27%. In contrast to a Snapchat, Google has a lot of transactional marketing. So if you're a Walt Disney advertising on Google, you're looking for a click that reverts into maybe a sign up for a free trial on Disney Plus, or maybe tickets or reservations to their Walt Disney hotels. Same thing with a Lyft, similar thing to a State Farm. From a Google ad, you're looking for somebody to actually want to get a car quote or something like that, whereas you're just doing kind of Chris Paul type advertising on something like a Snapchat. So it should insulate Alphabet just a little bit, as transactional advertising is not going to be pulled as fast as as just this broad-based advertising. The reason why Snapchat saw just a massive decline in demand for their ads just over the last couple of weeks is because the nature of this advertising. It is the force to get pulled when the CFO sees that the company is not going to make the numbers, whereas Alphabet advertising will stay as long as it remains profitable on a per-click basis. That's why when we look out with Google, rather consistent growth rate quarter over quarter. The Wall Street is expecting kind of 14, 15% growth rate, really, quite frankly, out another 2 years over at Google. And so as long as Google meets these targets within a certain reason and a certain range, that could help Google stock perform okay. The other thing that we looked at is their multiple is already kind of at the industry multiple. So certainly if Google goes down, the rest of these stocks outside maybe a Facebook will likely go down exponentially more since they're still wildly overvalued compared to the market leader over at Google. In my opinion, out of all of these stocks, Google is the only stock that I would hold through this time period. In fact, I am doing that. And on top of that, it'd be the only one I'd be thinking about buying the dip on in the shorter or intermediate term. Obviously, when we look at the Google chart, it went on this massive uptrend. Now it is in that massive downtrend. It has found support down here at about $2,000 per share. If you wanted to step in at that level, that certainly could be the first spot. It wouldn't be a full allocation. Let's say you wanted 10 shares of Google. As it tags this 2,000 level, maybe one share, maybe a half a share. Some of you are laughing, but yeah, that's probably what I would experiment at this level, because when the industry sees demand dry up as fast as it has, as fast as Snapchat indicated it has, well, there's going to be no snap back per se in a lot of these stocks. You'll see some bear market rallies in these things, but they'll likely keep retesting these lows. The more you retest these lows, higher probability is that you actually fall through it. And I would be far more aggressive on Google as it falls through that $2,000 level. Otherwise, I'd like to dollar cost average at near that level. Moving on to Pinterest, we're seeing this one get absolutely destroyed, down 21%, and that's likely not affected their multiple yet. We're seeing it traded about 5.5 times sales. That's likely going to come back into Facebook's range, down south of 5 times sales over at Pinterest, starting to look a little attractive over this company, and certainly in a looser regulatory environment at a $15 billion valuation, which is just quite frankly going down and down and down. A company like this would get acquired very quickly, maybe from a Google, maybe from a Facebook, maybe even from Microsoft, which I think has been rumored in here as well. But in the regulatory environment that we're in right now makes it a little bit difficult to put a floor underneath the stock. In a loose regulatory environment, the stock probably would not even be public. It would have already been purchased. But we have to imagine there is some kind of imaginary floor underneath Pinterest valuation when other bidders, maybe an Amazon, maybe Microsoft, again, maybe Google, maybe Facebook, maybe they think if the economy tanks, regulators will allow deals like this to go through. We'll see if that changes the regulatory environment. The problem with Pinterest is Wall Street is expecting kind of low 20s growth about a year from now. If that doesn't materialize, this stock will definitely not move higher, and it could ultimately send this stock lower. Now, some of the things that we do like about Pinterest is this company is on the verge of profitability. They did a nice job over the last year controlling their costs. In fact, they went up just marginally. That really drove some income from operation gains from a $23 million loss last year on a quarterly basis up to about $3.7 million loss from operations, essentially break even. We'll see if that trend is able to continue, because obviously if you start slowing on this revenue side and you don't pull back on these costs as well, the losses will continue to accelerate over at Pinterest. Now, from a technical perspective over at Pinterest, it just is a complete disaster. It looks like a very high probability to me that you want to retest these March lows. I think a lot of these stocks will probably retest these lows, and that is right around $10 per share over at Pinterest. So you've got another $7 to go where I'd even think about this from a technical perspective. There'll be some wonderful buying opportunities in this market. Certainly when we look at these valuations, they're starting to pull in, but the worst is not priced in. When Snapchat lets barely a month go by before the macro environment deteriorates business so much that they have to come in on the low end of their Q2 guidance, and then shares rapidly sell off by 41%, and then essentially the rest of the industry trades off in lockstep, that to me is showing you that you do not have Q2, Q3, Q4, and certainly not Q1 of 2023 and beyond priced into these stocks. If this weakness maintains, I would expect the valuations and the multiples and the prices on all of these stocks continuing to go down. I would not hold a single one of these stocks outside of Google. And quite frankly, in the shorter term, that would be the only stock out of this group that I would even consider buying in the shorter term. I will be back, hopefully with good news at some point. But folks, the markets are deteriorating very quickly and very rapidly. And this Snapchat press release, I believe, is probably just the first of many that are going to be coming over the next couple of weeks. Stay diligent and stay active in these markets. At some point, they're going to be absolutely smoking buys out there. In the shorter term, I would steer clear. Hopefully, guys enjoyed today's video. I'll be back in soon with more. Good luck with your investments.